Good evening, everyone. It's Chrissy from Solstice ATR. You can find me on Twitter, Instagram, as well as Discord. We use adaptive algorithm for either side of the market, whether it's bullish, whether it's bearish, or going sideways. And we will illustrate in this coming week's video the outlook for the coming week. Remember, we're not a broker dealer. Past performance does not indicate future results on either side. Use at your own risk. Data may not be copied without permission. Check the website policy at Solstice ATR, or you can give us a call at that top number right here at the 626-625-5693. Let's go to slide 2. And what I wanted to do is talk about if we are ending a bearish market, or are we still in a downtrend? As you can see in this slide, on the weekly, we're still in a downtrend. Even on this rally back from July 13, that was the July 25th, that last week bar. And in the last couple of weeks, we had a nice rally. On July 13th to July 29th of 2022, the total return from the open to the close, basically the open of the bar, wherever the open was till the close, the SPX made 13%, the NASDAQ made 17%, the Russell made 14%, as well as the Dow Jones Industrial Average. If you are not able to trade futures and commodities, you can trade the ETF. For the SPY is SPX is SPY, for the NASDAQ is QQQ, for the RUT is IWM, for the DJI it's actually DJA for the Dow 30. And let's go to the next slide here, and let's talk about what I had in the prior weeks on my slide and where we are today. We use adaptive algorithm to give us answers in the market. On the week of July 16th of 2022, that bar on Thursday and Friday, the candle rallied up and gave us a 1.3% rate of return. And I said to everybody, pay attention, because is there a change in the air from being bearish, and the trend may change to come in positive, even if with these bad negative earnings we are having in the market and some positive earnings. The Federal Reserve has increased on Wednesday 75 basis points on the interest rate of the overall market. And inflation is here. It's not going to go away that fast. Plus, sending 160 billion barrels from our reserve to the international market as well as to China. Basically, Brandon administration has done things not the right way, tried to push, EV cars into trade. They want to go eco-friendly. In reality, where do they get the electricity for the cars? I'm not going to go into it, but let's go to the next slide to show you what I mean by it. That's slide number 4. And in slide number 4, you can see the S&P 500 has given us a total weekly rate of return from the July 16th till today's date, July 29th. We have a 14.57, 14.59. It depends if you look at the 4 o'clock close or the 5 o'clock on the SPX. We have as well XLK. XLK is the technology sector of the NASDAQ 100, which is the QQQ. We noticed that we had a rate of return 25.29%. And now IEF, which is the bond market, if we know interest rates are going to stabilize and the par value of those bonds going to start increasing, this gives us an overall idea if there's a turn in the trend in the overall market. Let's go to slide 5. And here I made it a little bit too big. I zeroed in on the PDF by accident. It's a little bit higher. It shows the 2002, 2008, as well as the 2011, 2016, and 2018 and 2020. After the market was down and the reversal, how long it took it? 1 year to 5 year total rate of return. We have a medium rate of return of 23 on 1 year and a 41 on 2 year. And 3 year, remember the 2020, we have only got 21 and 22 here. We don't have 23, 24, or 25 yet. As well here, we don't have these 2 years. So if we can average over time 23%, this is to the upside medium rated return and the outlook for the market. In case we get a drawdown in the market, remember this is hypothetical historical numbers. What the future does may not do the same what it did before. If we take a look at the 2002, 2009, 2011 through 2016, 2019, 2020, the drawdowns, how far they were and how shallow or how deep they were. They were as low as minus 11% and as shallow as point minus 0.12. Some of them lasted to 130 days, some lasted only to 4 or 5 days, and we reversed back. If we have a medium drawdown in the coming weeks, 5-6%, pay attention to what the market offer you. And these are the drawdowns in case the market goes down. These are the numbers from where we are today on as of Friday's close. I did not do the ones for the upside because I didn't want to, go over it, because you can calculate to the upside 5% and you can calculate 5% to the downside. But what we want to do is go over things and explain it to you in detail. So slide 6 is basically telling you, thank you for visiting our website. If you have questions, please give us a call. You can check the website. Once again, hit the smash button and subscribe. It's always for free, this weekly video. Let's go here. I'm showing the S&P, the NASDAQ, and the Dow without the small cap. If I take this candle down here from the low, from 613 or the open of it, let's go from the open. I click on it right there. To the top of this candle, you can see that the overall market did 12.56. There is no one in their mind they're going to tell me they got 12.5% from the bottom to the top on the combination of the three. Even if we take last week's bar or the week before when we're consolidating going sideways, we take this bar, which was triple bottom, consolidation, and a breakout. From here to here till the close, we got a 10% rate of return. That is a great rate of return coming back inside that linear regression downtrend. But we are still in a downtrend if you tell everybody, but we are reversing back up. We retested the February, January, and the March low and pushing higher. Do we hold the 18 simple moving average, or do we reject the 18 and the 116 simple moving average here to fall back halfway before continuing higher? So that's what I want everyone to pay attention to. Let's break it down step by step, and I'm going to use the micro 2K. That's the Russell Small Cap 2000. Russell 2000, or you can use the IWM. We can see since the February 19th all the way to March 23rd, we had the rally. We consolidated in this area in October, November before the rally up. Then we took off. We went side range for almost a year. We looked up in November that year, and eventually we fell back down in range. And ever since the Russell was a lot under pressure, we can see we are in a linear regression downtrend. Eventually, we're starting to break to the upside. Could this form a cup here? Possibly. The 18 simple moving average is your midpoint for the Bollinger Band, and it helps you, instead of using a 20 SMA, use an 18 to see where the levels are on the daily and the weekly in case you get a rounded bottom, to continue to the 38, 116 simple moving average, and the 50 Fibonacci, which is as close as the 50 SMA, which is in yellow. So that's the small cap. Let's take a look at BTC, and I'll use the micro BTC here, micro BTC. And what I want to talk to you about in the, micro BT, I'm sorry, micro BT. Sometimes I don't pay attention because I use the large one. We can see we were in a linear regression downtrend in a cone, getting narrower and narrower. We looked lower, and this was getting a rounded bottom. It looked up, failed, came back, retested, and pushed higher. We retested the 24,300, and eventually here we looked above it, and we closed right on the weekly at 24.95. If this is going to continue, we'd like to see that Bitcoin fills this gap here in order to make some crown for itself, as well as touching the 18 simple moving average on the weekly bar. But if I go to the daily chart on the BTC, which is the Bitcoin future, slash BTC, I'm making these mistakes from the beginning of the video. I have the annual fib from low last year to the high. We eventually fell down and we called that reset. So in this area, what I want to do is just talk about this area. We're going to zoom in here. And what I want everybody to do is pay attention to that gap. Pay attention to the monthly measured move, that zero line, because the monthly was up here and the low of it is here. When we draw the channel according to the time spent and the volume in the profile, things either shift lower or higher. So my line in the sand is 25,273. If we can clear this area, I'm expecting Bitcoin to reach the 50 SMA and the 61.8 and eventually 100% of the move back up. Because if you take the 61, there's a 78 and 100 here, similar on the way going down. So if this candle can move back up, what we want to do on the daily chart, oops, this has the weekly, we're going to go to the daily chart 1 year so you can see what was going on in the last week's range. This is basically last week's Fibonacci. You can see the high and low. This week's range is from here to here. So this fib is no longer valid. You can remove it. I'll show you how to do it. This where I usually activate the drawing, grab the measured, grab the weekly high and low, tell this is the high. We get a Fibonacci from here. Usually the fibs in TOS are just 0 to 100. I've added the other extensions to them, and this is the high of it. And click it, you got the weekly highs and lows. Edit the property, and what we can do in the editing the property, we make them for the weekly bar gray color so you can see the levels. On the last 5 days when Bitcoin reset from the 24,300, which I told everybody, it fell back down, found the level that we had the prior gap here. This is no longer valid. This gap has been filled in full. Remove drawing. So the only thing I use is just a marker as a gap. So when we pushed back up, we retested the 24,300. If we create a shoulder here at the 38% fib or even at the 20, that is okay. And retesting the 50 and continuing higher, that means we can retest the 50 Fibonacci on the monthly measured move, eventually getting to the 20 and the 38, then eventually the 50 that would be in the weekly bar oversold territory up here. But I'd like to see BTC continue higher. But if it doesn't, look for the reset to continue back up. And I hope this was helpful. I explained it in detail. Let's go now to the ES, the S&P 500. You can use in the S&P 500 the SPY. Once again, this is the monthly measured move. We can see we came back on the weekly in the last 3 days. I would consider this a window dressing. There's a gap here. It still has not been visited in the overnight action. There's another one down here. I'll show you how it looks like. We came back to the consolidation of this area. This is a very important weekly bar that we created. We created that side action. Then we had the double bottom here. Ever since that Thursday, Friday rally on that push up, we pushed quite a bit than the week before. We retested the 38 and bounced back up to continue to the high side. If we can clear the 116, you can see on my charts, I do usually have ovals on the right. I'm going to go to the weekly to show you how it looks like. We're going to go 3-year weekly. So you can see where the areas are. We are in a linear regression downtrend. We broke this smaller symmetrical triangle looking to go higher, but this does not have to continue because this is the bar that took us down. We didn't test the peak of it, but we closed where the open was. I closed a little bit above it. If we can clear this candle to continue, our goal is to get to this wick. If we cannot get to the 50 Fibonacci and the 61.8, we may create a shoulder where these ovals are, the highs, the midpoint of it, and the low of it. I do not want to see losing this area because this was the trend that we broke above. If we come back and retest the 38 or the 50, it gives you an opportunity to buy back to continue back up to this oval. And if things do change and we lose it, we look for the backside of this channel and this oval here. So let's go now to the NQ, the NASDAQ. I'll do the QQQ instead of the NASDAQ to show you how it looks like. Usually on the NASDAQ 100, we can see that the annual fib from the March low to the high is right up here. And we have on the weekly, the highs and lows. This is a weekly bar. This is a weekly bar. This is the candle that on Thursday, Friday, when it took off, it consolidated and we broke up. If I take this bottom from here, let's get the one that draws the line. If I take it from here to the high, you can see we have a 17.5% rate of return since the June 13 low. Does this mean we can continue? Possibly. If we find resistance at the 78% or the 80% of the F3, which is the 38.2 and the 116 simple moving average, that moving average up here, if it acts as resistance, we can create a shoulder before breaking up to the 50 Fibonacci as well as the 50 simple moving average. And if we fall back down here, look for opportunity to buy before continuing higher. And I'll show you the NQ. So that way you can see a little bit more different style the way I do things. This is the NASDAQ 100. Even if I zoom here from the high and low, you can see my Fibonacci's, where they are, how they act, and what I do with them. So basically we broke out of last week's range. We looked up, we tested the 61.8 on Friday, but we stayed wide underneath the close. But we are holding the 50. If I do a line between this line and this line, there's a 50% here, and that 23% is almost identical. If I come back to this oval and I'm able to buy back on continuation of strength, that would be great. Looking for the backside of the F3 on the charts in the NASDAQ. Let's go now to the YM. I'll do YM by itself. I usually don't do much YM, but here's YM. It's in a similar situation on the weekly and the daily chart. You can see that linear regression downtrend. We broke and cleared this gap that was on the charts. We had a 4-week consolidation and eventually we broke up. Can we retest and clear this candle that we broke out of this channel by time to get to the backside of this channel? And these are the 3 ovals on the weekly bar on the Dow. Let's take a look at CL, crude oil. And what I want to do in crude oil is basically bring it on a daily basis. Remember, this was last week's Fibonacci. We're going to go to the daily chart. 1 year, because I didn't clean all of them. I wanted to do some with you guys on the chart. Usually that was my last week's weekly Fib. We have to remove that from the charts. We can see the last 5 days, 1, 2, 3, 4, 5. This is the low to the high here. And what we want to do is basically grab the Fibonacci from the low or high and draw it either way. It doesn't matter which way you draw. If you think crude is going to fall back in, you draw from top to bottom. And what we want to do is change the color on it, edit the property, and go back in here and change it to a gray color and put it to the downside so we can see the highs and lows. If I end up losing the 61.8, that's going to be a problem. But if I find support here and we can clear back up, crude oil will continue back to the 23 and the 38%, 50%. But if it does not do that, look for the backside of this oval. And what I usually do is I anchor my activate the drawing. These are hand-drawn ovals. I'll put one here. I'll put this right in the middle, activate the drawing, grab it, put it down here for the 61.8 and the 50%. And this one, in case we do activate the drawing and we end up going to the 38% on the top and the 38 on the monthly measured move and the 50, that would be a great area for crude to find the level on crude oil. Let's take a look at GC. Finally, GC this week had found the level of 1695, 1712, and eventually gold GC rallied back up. This was my monthly measured move duplicated from the top to the bottom on the charts. We got to these ovals. I kind of had to push them around because they were overlapping the candle, so I had to make them smaller here. This one stayed the way it is on the weekly chart because we never reached it. So we can see that total reversal at the 1695. We consolidated a little bit. Once we cleared the 1710, 1724, we had that little Wednesday, I mean this Tuesday, this is Monday, Tuesday, Wednesday, Thursday, Friday, and we pushed. Where did we get to? To the extension that we drew the fib from bottom to high on the monthly measured move. What I'm going to do is use GLD for the Fibonacci's. GLD is the ETF fund for, oops, GLD is the ETF fund for gold. And what we want to do is take a look at the overall market, how it looked like on the daily in relationship to the weekly. We're going to go to the weekly so you can see all these levels a little bit more cleaner. We were consolidating around the $132. Then eventually we had this professional gap. We looked up, we spiked up. We fell back down in March in 2020. When COVID hit. We tried to rally, couldn't make it, came back, consolidated. It took us about 4 or 5 months. Then we eventually broke that channel. We double topped here. Ever since then, we fell back to where? The back side of the channel where it found support. And this one is coming from way back. You can see from 10, 11, 2018, this linear regression uptrend channel. We found support here trying to push up. But remember, this is a linear downtrend channel. We're still in a downtrend until we clear that uptrend candle. If I zoom in here, you can see there's that line here, this one and this one meeting. In order to come back and clear this area, it has to find the 38.2% fib in order for gold to continue and find. This is going to be a little bit of resistance in this area because these were 3 soldiers down, because this is the candle that broke it and we continued lower. Now we're trying to come back to where the breakdown in this candle is very important for gold to clear before continuing. It may push up, find consolidation, then clear this channel back up. So this is why I use the GLD, because it's a little bit cleaner on the charts. Let's take a look at now a couple of ETFs, XLK, which we showed in this slide. You can see XLK, which is the NASDAQ 100 tech sector, showing some strength in it, and it did about 24%. If I take this bottom, oops, let's just go get the line. We'll get the line. So that way you can measure the angle from low to the high. This is the total return that we had in XLK in the last week and a half, 3 weeks, 4 weeks, about 18.13%. Let's go look now at XLV, which is the healthcare sector. And you can see that the healthcare sector, after falling, it was consolidating at the 38 annual fib. And we're trying to clear the 50 simple moving average, but we closed above the 18. And the 18 and the 50 are trying to find level before continuation, and we get a separation either to the upside or to the downside from it. So pay attention to what XLV does. Let's take a look at the XLP, which is the consumer products and staples. We can see we fell in and we're trying to push up. We closed right underneath the 18 SMA. XLF, the financial sector. We can see that the financial sector, if the business is going to start growing and getting stronger and the economy going to do well instead of going in big recession, we can see that we stalled right at the 61.8 or the 38.2. It depends if you draw from top to bottom or bottom to top, the fib. And we are sitting right above it, but the 18 simple moving average is right under on top of us. So pay attention to that. Let's take a look at the XLE, the energy XLE. We can see that the XLE energy, after that spike up, we fell back down to the 38.2 fib extension, which is similar to 138. Found a level around the 20, found the 50 simple moving average, bounced back up to the 18. Does this mean that the energy sector is still strong, or do we get a reverse back down? Because we are in a linear downtrend. Because if I do grab a line from here all the way to here, that's a downtrend. And if I grab the backside of this channel to this one, we are in a linear downtrend. So you be aware of it. Don't get caught and say, hey, I told you to be long or short. Trade what we see in the sectors. Let's take a look at AAPL and show you how well Apple did. We'll do this on a daily chart. After the earning report, Apple reported very well, and in the last 3 days rallied quite a bit. A lot of people didn't expect it out of Apple. And we can see that the measured move after the earning report this week, this was the dump. It created a shoulder a head and a shoulder. It's inverted shoulder, a head, and a shoulder. You can see it kind of did a little wiggle here, and eventually we broke up off. This is my monthly measured move on Apple. We cleared what? If I duplicate this fib, if I grab this fib, let me show you. I'm going to go duplicate the drawing, and I'm going to move my 0 line, my 100 to the 0 line so you can see it. And I'm going to put it in a gray color so everyone can see that. Edit the property. And what you can see, instead of being yellow, I'm going to make it like an off-white. You can see that the extension from the 0 line to the 61 is the 38.2, and it cleared 100% of that line. Very important area for Apple to hold is the 156, 157. In case you are holding Apple for a while and things are going well in it, it does not mean that you at 157 156, you let go of all this rate return and you fall back in the range of the 145. Don't do that to yourself. Make sure you have some kind of a stop around the 155, 156. If it's going to continue, get to the 161, and this bar that took you down, brought you back up, couldn't get clear it, fell down, tried to rally, then eventually we broke this one. We are at 100% back on the monthly measured move, cleared on the earning report. Pay attention to 156, 155 in Apple. Let's take a look at Amazon. We can see Amazon spiked up on earning, did very well, and it sold off on the monthly measured move around just above the 25%, 30%. It didn't make it to the 38%, but fell back in range. It's consolidating at the 135. Let's see what it does. Let's take a look at Meta. Meta is not doing that well at all. You can see how heavily it's being beat up. Let's take a look at NFLX. We can see NFLX trying to come. You can see where the channel is from here. It eventually retesting it going sideways. If this is going to clear, pay attention to this gap here in Netflix. Let's take a look at Tesla. Tesla did very well on the report of the earning, and you can see Tesla after clearing the 720 and eventually clearing the 805, it pushed up to the annual fib, which is the 50%, just closing around the 890 area. This is a very important number in Tesla. If in case it falls back down, don't be bullish or bearish. Trade the 845 going back up or the 830 because things got over pushed and overdrafted. You can see the measured move is 61. If I put the 78, is about here. And if I put the 200, 100% retracement on the monthly measured move is about the 200 simple moving average on Tesla. Let's go back one more to take a look at the S&P 500. And I want to close it with one thing. Don't be biased to either side. Make sure you understand the trend. Trade what you see on the chart. When you see an action happening and it's going to the bullish side or the bearish side, act on it. Don't hesitate. By the time you hesitate, you miss the move. Don't be wrong in your trading. If you are wrong, have a limit or a stop that says, I'm willing to lose 2%, 3%, max 5% in my portfolio because I don't want to bleed to death and hope it comes back tomorrow. So you look for some other instrument to make you money. Don't be biased and trade what you see, okay? So last but not least, we can see that this symmetrical triangle that we came out of, we broke up. We still have these two little gaps down here on the S&P 500, but what I want to do is go to the 4-hour, 15 days, so you can see how I trade basically the measured move. We can see that this gap happened here. You see that low was tested. This was the close in the market the prior week. That was in the overnight action. Look, we retested this area. I'll put this marker here to pay attention to that marker because it tells me in case it's going to come back. That's a virgin gap in the overnight action, but I use the overnight to know where they are. We retested, consolidated, and eventually after the Tuesday rally in the Federal report earning, we were consolidating here for 5 days. We broke up on the Fed day. We retested halfway of the Fed day. You can see it here, this candle here. This gave me an opportunity to buy, and I'll show you why. If you look at this candle, that was 4,016. In this candle, the close of it was 4,020.5. Let's say if I want to find an opportunity in the market to purchase. So we looked, when we came down, we looked below this 4,116.25 and above the close of this candle. If you think that you're not going to buy the 16, you want to buy the 20, which is the close of the the Wednesday action, you can get in this area, rally it, and your first target would be the Fed high. And if you break above the Fed high, you can either take some off or add to the position, running it higher. And we had that nice push on Thursday. So if I take a look at the Thursday range, this big candle high to low, and if I look at this bar, when we retested in the overnight, we tested half the bar. So that was another buy zone. Let's say I did not purchase it there. I purchased the breakout of the Thursday high. This was another rally back up to the close on the weekly bar on the chart. And we are in an uptrend. You can see that the channel is here. We have a channel here. If I end up losing the Thursday high and I end up losing this, I'm going to look for the backside of this candle and eventually the 4,045 area, 48 as support, because that 18 simple moving average will catch up with the 38.2 as well on the charts for Monday. Trade what you see, not what you think, and I hope this was helpful. I look forward to helping you, and once again, hit the smash button, give us a jingle. Take care. Over and out. Enjoy your weekend.